Good morning, everybody. All right. So, is there a Mr. Yeah, so the market's correcting here a little bit. Nothing of significant yet. We'll see how it unfolds further here. Um, Historically, markets typically go up around Thanksgiving. Well, how much? It's just bullish intraday. It's just been my recollection over all the years that things tend to rally, um, especially the day after the I don't well most people leave half a day on Friday. I think the market's open. I don't know if it closes half a day or it's open the whole day, but usually the morning things you know perk up quite a bit, and then things are over. We'll see how today unfolds, but um, I imagine things will slow down quite a bit in the afternoon. So starting the day, as you can see, we've got an inside bar shaping up. So while we have the markets showing that they're down, right, we go to the watch list each day and see, oh, what's up, what's down, what's gapping, and then we look at the charts and say, well, if they're up or down or gapping, where is that in relation to yesterday? Where is it in relation to the trend? Where is it in relation to pivot highs and pivot lows? Just because something's up or down, is it doing something of significance? And the least amount of significance could be, is it breaking above a prior day's high or a prior day's low? In the case of the S&P futures, it's doing neither. So we have a relatively neutral open, but prices were higher and now they're moving down to the lows here. Clearly, buyers stepped up at the 20 MA yesterday and rallied it all the way back up to the highs. And just thinking over the years, I mean, I've seen this a lot. I mean, you get a topping tail bar in opposition of a bottoming tail bar. And really, and the open pretty much open and closed where, went nowhere from day to day, one day to the next. So essentially neutral. And at this point, it's inching down. So if we were to look at this on a line chart, what we see happening was just a lot of going nowhere and then down a little bit and going nowhere. So as we come down here and we have yesterday's low, which is, right there. And then from there, I guess we look at the pivot, which I'm good with that, thinking, hey, if we're going to have some kind of holiday rally, let's get it moving down and create a void to rally from. And even below it, let it go below. But, we'll see. If it pops up into the, today and we get another bottoming tail bar, well, then I would suspect a little up. In any event, I don't think we're going much of anywhere in the short term, other than within this back and forth that's going on here for the moment. Now, as far as SPX, clear that up. This I look. There's a big open interest on the monthly expiration at 47.50. So I don't know that it could even get there, but if it does, it's not likely that it's going through it. And as I look, there was no premium there. No, it's a dime by 15 cents. So 47 and a quarter. Let me look at the spiders here. We're down here 466-ish. 466. Just for a point of reference here. So it's down near the bottom of that bottoming tail bar. And let's go to SPX. 47 and a quarter. I think that's a reasonable trade expectation that it wouldn't get through there. Since it's starting out down here, and that's why I went and looked at the spiders. It's near the bottom of the bottoming tail bar. We don't get the pre-market data here. So starting out down here, let me go back and look at that one more time. Is it on the 20? Just above the 20. So 47 and a quarter right now is 50 cents by 55. If you want to go 47.30, obviously it's less, 30 by 40. And however wide you want to go to make it profitable. So I don't know that I'd call it a total no-brainer, but I think it's a good bet that it's not going to get all the way back up there today. Now on the downside, which sometimes is the better way to go, even though it's going lower when you get further away. And wow. Yeah, when they see it's pretty interesting when they see just a little bit of aggressive selling, those premiums really pop. $45.80. So we can go down to $45.80. This Glenn's asking me, where's the no-brainer trade? $45.80 is a no-brainer trade. I mean, and I don't know what could rattle the markets the day before Thanksgiving to sell off like that. You know, you could be blindsided, but look, you got 4,600 in front of it, 4,680. You know, got this congestion area down there. I think that's a no-brainer. 4,680. So getting through yesterday's low wouldn't be a big deal. Going down to that pivot, you'd have, buyers down there. As it got down there, it would probably bounce. And then it's got to travel all the way down there, and it's got to get through 4,600 to get to your 45.80. It's going to be tired by the time it gets down there if it should happen. And I don't even think it could get through 4,600 without some type of a bounce going on, or a bounce here. So the stopping points along the way to the end, just takes time, and it just eats up that premium. So there you go. You go 47 and a quarter. And if you're a little more adventurous, there's plenty of juice up there. 4,600's $1.15 by $1.35. So these things are priced for the market to go down. That's what I see, Ken. 45.80 is 55 cents by 65 cents. Assuming my quotes are correct. That's what it shows. Jobless claims came in at a 50-year low. So what is that? Full employment? But everybody's sitting at home collecting checks. All right, let's look at the other markets. Dow has been the weaker. Came down here to the prior pivot low. As always, we look to the left. And 85,000 lower. See what it does so far. Just the same thing as an inside day. Maybe it's just going to be a running in place day. must be moving stuff around here. Inside day, right back down on top of the 20 near yesterday's low. Maybe get a little dip first thing in the morning and a bounce from there. So look how it's going down, popped up, and just an accelerated movement into here should set up a short-term buy. I think so. That's what I'll be looking for, since again, if it goes vertical down into there, you can see the selling is staying pretty consistent. Tried to turn here and didn't. So be looking for that. And if it gets down, keeps going below that, well, we'll just see where it goes. 1600 obviously lined up with that pivot. That's a clear place where should make a turn, but we'll see if it even gets through yesterday's low. All right, Russell. This has got to turn here, folks. All right, coming didn't quite hit the 50 yesterday, but this has already gotten too damn deep, and this market is well, we always say it is what it is, but it is frustrating, the type of price action that we're seeing lately, that institutions, and I've said this before, institutions go from, hey, it's happy days, things are going to the moon, to hey, 1929 crash, 87, call it what you want, but it happens in the course of an hour, and then it's like, things, they're not so bad. Let's rally them again. So, I mean, we've been seeing even lots of stocks and even ETFs that make these significant moves and then just fall apart. Some come back, but I mean, look at the size of this wide range igniting bar. My goodness. Now it's down here toward the bottom of it. And I haven't taken a look at the ETF of the retailers, but I mean, where is that? 99. A lot of these retailers are getting pounded this morning. And, similarly, got this year-long base in the wide range bars. This is looking better than the Russell, which is down to the bottom of the wide range bar, but it should try and make a turn here. Can you comment on internals? Yeah, here they are. I mean, pretty much where they were. This kind of hovering down here. So there's been a lot of damage going on under the hood. I mean, what's the hood? The S&P 500, the NASDAQ 100, the major markets. And so when we look at this internal breadth gauge and see it just going down the way this is, something's getting hurt. And, you just start going through charts, and a lot of software stocks are getting creamed. So the hood could be Microsoft, and then you go and look at the stocks within, what is it, XWS, and, the software index, as I did over the weekend. And I was like, geez, it's nasty out there. I knew it was nasty out there looking at this, and I go and find the nastiness. But sentiment is still up here at an extreme. So you see markets, going sideways like this, and you get one red day. One red day doesn't change the trend. So, these option traders that are looking for this thing to keep going up, they're not running for the exits. That's what this says. But if it got a little nastier, yeah, this will start to come down. So no signal at all. We don't get anything there. All right. Silver. I mean, big freaking rally right back down to the lows, but I guess, it's more of a bottoming pattern. Came up to the resistance there, and we'll see if it holds. Gold, beautiful rally. Geez, got tightened up here. We talked about this 180 reversal that was a little mini breakdown failure, all the way back down. What a schizo market. Crude oil, weekly got extended. It's coming in here again. We'll see. Looks like it's heading down here. By the way, the 20 on the weekly is the 100 on the daily. So I know where the 100 is. So moving averages are subjective, but it is a reference point that can come into play. So looking at that at about 43 and a half, 43 and a half. Is there any? Well, there's a pivot there. So when you see it pivoting like this, how significant is one pivot, where it just in a strong trend. And while it could stop there, I don't look at it as being that significant as opposed to, a congestion area like that. I don't know that it'll get down there, but there's a lot more overlapping bars. And so those that look at things like market profile or volume profile, just a fancy way of looking at where the large part of trading has occurred. And it's primarily used on 30-minute charts, but this is all it's doing. I mean, if you can slightly turn your head to the left, you're going to know where that point of control is, right? Where the majority of trading is taking place. So a lot of indicators to do things you can do pretty quickly with your eyeballs, and it doesn't cost anything if you can turn your head a little bit. Bitcoin hovering down here at that little congestion there in the 50 MA, hasn't been able to lift off. Maybe it needs to come in a little bit more. And transports, right, held up pretty darn well, right? The rails looking good, and like I said, some of us dipped our toes in the water in these airlines just because, hey, strength, weakness all the way back down is another example of it. And we'll see if it pops back up here again. Yeah, the dollar, which is been on a tear, kind of makes you think, all this talk about the Fed's not going to do anything, but really, I don't know. Why is the dollar going up like that? If it isn't going to be in anticipation of tightening interest rates, and while the Fed hasn't moved, damn well the markets are pushing up interest rates. So there's the 5-year, which is in a bull trend there. So I think this is what's going on. The market's saying to the, whatever the Fed's saying, we don't care. Right? We're going to make it happen, even if you're not. So all yours, Dan.
Good morning. Yeah, and then more and more people are coming out on the Fed's behind the curveball, something I've been saying for 6 months, along with inflation. All right, all our opens are fine. Amazon, we have a condor. And look, that's absolutely perfect for a condor. Opening right in the middle there. So that is fine. Expires Friday. We have a couple call spreads on. ICE, we're short stock. I see it selling off here pre-market. So that's good. What else? UAL down a little bit. We have a put spread for Friday, the 45s. I went ahead and tightened the stop on what's today, Wednesday, under Monday's low, just to protect the open gain. MA is on our day trade long list. Look at this beautiful 15. And it's holding horizontal very well, relative strength. So for a day trade, that's a tier 1, looks great. This Futu here, bottoming pattern. We'll see if it can have a strong close. plan, bottom right. That's what we call a possible gap and snap. The thing is down a lot in a short period, and now it's gapping down another 10 bucks. I'm going to put that in a window. Well, I have it right there. Marriott, we were looking at hotels yesterday. This one still looks good over yesterday's high. Set an alarm. Some gappers and not too many earnings out. Goggle, gap in the 870. It's a bullish gap, but no pattern. ASML down 778. I don't have a bias. We'll come back to you. We did a beautiful call spread in Tesla yesterday. We took our money into the close. Wow, now it's down 34. It was down 10 bucks earlier, but you know, the news was out again of Musk selling another $1 billion worth. And so I'm sure that's what caused the weakness yesterday, which when we put on the trade, I had no idea why it was falling. And that's the beautiful thing of being a technical trader. The charts don't lie. Now, this one's interesting. Remember, I had this on my list as a topping pattern the other day. You know, got extended, rolling over under the 20 price void. Now that it's snapped right back, not a bullish close. Now it's back in the bullish camp of a downside shakeout with a bullish weekly. So that's on my long watch list. Now, Riot's gapping down, so I don't think it's going to happen anytime soon. But if this were to take out the red bar's high, that's what we call a beautiful bear sandwich. And Greg, look at this one. We got to give another name. Look how they're still wide range green bars. In the meat in the middle, the bear is a double decker. I guess that's what we call it. A double decker bear sandwich. That's a big old piece of meat in the middle with a price void. So if it takes out that high, but you know, it's going to go with Bitcoin. There's the Marriott. Talking about Bitcoin, Mister, we've been selling way out of the money, expensive naked puts on this, and I'm glad we got out of our earlier ones because this we were like short the 670s, but greater than 100% retracement. If this can get over Monday's high, then I'll be looking to sell put spreads again. Let me set an alarm right now, 7:05. I guess 700 is fine. Because this stock has really high premiums. Game 383. We'll come back to you. Something was up yesterday with that big old volume. Now it's gapping up. GES, I think, had earnings. No pattern. Dell had earnings. No pattern. NTNX gapping up, but in a downtrend. No pattern. VMware earnings. No pattern. BFRI, recent IPO. It's kind of a climactic buy setup with you know, a 3-bar reversal. Now it's gapping. Wow, it's gapping up too much. Wow. Greg, you're talking about crazy price action. This thing went from $5 to $2, and now it's gapping to $6. Go figure. Wow. Futu, I mentioned. LGVN. This looks like a day trader toy. Zoom. Oh, the ARC lady was on CNBC this morning. Arc Lady, talking about her funds and Bitcoin and the future and this and that. But she was also pumping Zoom. And so I watched Zoom pre-market go from negative to up like $3, just while she was talking. And now it's back in the negative. The cover of the Wall Street Journal said Walmart, CVS, and Walgreens were held liable in the opioid thing. I didn't read the article because I don't care, but I wanted to pull up the stocks to see what they look like. That must not have been bad or priced in because I don't see much to do with bad there, but it is in an uptrend. CVS, that's kind of a bull flag. Bull flag daily, weekly, sloppy. And it's holding it. And then Walmart, look at that, zero effect, or at least the losses, it's opening flat. Yeah, Deere had earnings. But no pattern, John, nothing to do with it, unless you can tell me a put spread at 345. All right, JWN and GPS getting whacked. So let's see if buyers are going to buy this dip here. They are so far. JWN, GPS. That's a big 25% whackage. And they said on supply chain problems. Yesterday was BBY getting whacked.